What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is July 22nd of 2020. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, we're not only going to be talking about the seismic shift we can see in Bitcoin here over the next 48 to 72 hours, but outside of that as well, talking about the emergence of decentralized exchanges, and also diving into some interesting research coming out about how much Bitcoin's Satoshi might have actually mined. So we've got lots of things to discuss in this video right after our quick sponsor. Our sponsor for today's episode is Ledn.io. For those of you holding Bitcoin and digital assets long-term like myself, why not put it to work? Ledn works with Genesis, the most established institution in digital assets, to give its retail clients access to a suite of institutional-grade services to manage their digital wealth. Their savings accounts let you earn the best risk-adjusted rates on your digital assets, like 8.8% on your USDC and 4.1% on your Bitcoin. With their B2X service, you can double the amount of Bitcoin you own through a Bitcoin-backed loan, and you can get dollar liquidity without selling your Bitcoin through their Bitcoin-backed loans, much more tax efficient than selling. Get a 250,000 Satoshi bonus if you register with the link below and get a loan today. Alrighty, everyone, so let's go ahead and start by taking a quick look across the board for the market. For those of you out there who are still hanging in some of the key plays that we've been watching, many of which are Kava and BAM Protocol, you're still probably doing pretty well in the market right now. But as you guys know, I recently took a position that we're probably going to start seeing a little bit of a pullback in the altcoin space. And right now, we've kind of been in this no trend scenario, and we've started to see more and more plays here, especially in the DeFi space, start to take a little bit more of a red tone or start to kind of push sideways and consolidate over the last few days. So again, we're going to be continuing to watch this trend here and see what happens, and we will dive into the topic of altcoins in just a bit. But I wanted to mention to you guys that for Digifox, we're doing an over $2,000 giveaway in the form of USDC to our user base. The basic premise is that we don't want to spend it on advertisements. In fact, we just want to give money straight back to the community for investing in themselves. So basically, rewarding people for depositing into their Celsius accounts through the Digifox wallet. And if you guys want to learn about the terms for that, just check the link down below in the description to learn more. Again, we're really excited to try out this campaign and see how much people we can get investing themselves, planning for their future. And that's the general goal of Digifox, is growing a financially literate community that's focusing on their own futures. Now, I want to dive straight into the topic at hand here. This is probably the most interesting topic for many people out there, for those of you who are just either holding Bitcoin or just want to see a more broader market move, as market capitalizations, as much as the market has been quite exciting, haven't really moved that much. So one thing we have to talk about here is what's going on and a lot of the different types of derivatives markets out there. So again, we're not just talking about spot markets. We're talking about futures. We're talking about different types of leverage trading platforms, all types of different things out there that, again, are trading on top of the spot markets, right? So Bitcoin futures right now have passed over $1 billion in open interest. Simply put, this means that right now we have the largest pool of positions, liquidity built into positions outside of spot markets that we've seen since back in March. Okay, so this is not per se really a great piece of news or a bad piece of news. It really just means, more than anything, that we're going to be seeing likely a very big move here in the near future. Right, we're starting to see an increase in liquidity here since back here in March, and as we've been pushing sideways up against a very key point of resistance, it's likely that we're going to see some form of move here. Now, when it comes to leverage trading platforms, there can be certain events here. You can have, for example, short squeeze events, where if there is enough upward movement in a short period of time, you start to knock enough people out of their positions and it causes a cascading effect. Now, just taking a look here at Bitcoin's chart here on the weekly, right, we're still riding up against this range of resistance here. We've also still got a likelihood that we could come down here for about a 40% correction down to the low $6,000 range to set in another low here, right? Setting in a fourth low. We have the first one back here. But really, if you're talking about since we set the low in from the bear market, this would be our third bottom here before we break out of the wedge. But we also could, as we've already talked about beforehand, get a breakout here in the next few days and really climb up above and start to kick up towards around 11,000 or 12,000. Taking a look at the daily, again, this is starting to favor the bulls here. Right, we're closing up higher and higher towards this level, and depending on where you draw your line, again, I would say that I'd be a little bit conservative here in saying that we've broken above here. My main goal is to see this get up to the kind of range we saw back here in June and actually hold at this range and possibly even continue higher. The further away we get above this yellow line here, the more and more confident we can be that we've actually broken above this line of resistance that's been holding Bitcoin down ever since the peak of the bull market. Now, if you want to take the bull's argument here, I think the best case you can make is that we've already seen this for altcoin dominance. So if altcoin dominance is taking a very optimistic tone here, right, we'll just go ahead and turn off the logarithmic so you can see it a bit clearer. As we can see, considering the line of resistance here, we've clearly had multiple weeks where we've been hanging above this line of resistance for the first time since back here in January 2018. So this makes me a little bit more confident here. Again, I want to make sure that I keep my positions conservative. And again, as we discussed back in a previous video, I'm going to go ahead and bring Bitcoin back up here again on Bitstamp. Keeping in mind our chart here, there's really two things we're watching for. Either we're going to get a break above here in the next 48, 72 hours, most likely, where we really start to pick up trend here as well as volume. So this would be what the bulls would want to see. Or we're going to get a pretty stark rejection here. And if we break below 8,800, which is where we set the last low back here in late June, then in this case, we're probably going in for the full 40% correction. And this is where I'd be very careful for those of you who are positioned in a lot of the kind of higher valued altcoins, or at least the ones that have been really kicking it into high gear against Bitcoin over the last few months. Again, make sure to be careful, take profits, and have certain positions set to protect yourself. Again, I don't want to give you guys your direct financial advice on this. This is something you have to determine for yourself, but it's what I've started to do. I basically have taken some limits on some positions, and I'm basically making sure to have stops on others to make sure that I don't lose all the progress we've made over the last few months, right? That's what a smart trader has to do in this case. So next up, I want to spend some time to talk about decentralized exchanges and focus more into the trend within DeFi on a more fundamental basis. I know a lot of people think that DeFi is mainly a lot of hype right now, and there definitely is a lot of hype around the topic. However, on a fundamental basis, there actually is a substantial increase in a lot of the utility, or at least the use case, of decentralized applications. And there are really no better example out there other than decentralized exchanges. In this case, we've seen a record pace here in July. We haven't even finished out the month that's outpaced June already of $1.6 billion in aggregate volume between large platforms like Uniswap and Curve and Kyber Network, and also newcomers like Balancer. So again, this is really exciting news here, and it's going to be interesting to see maybe by the end of the month if we can get above 2 billion in volume, 2.5 billion. But if we continue to see on a monthly basis this number continue to grow and at the exponential rate that it already has been growing throughout 2020, then this is going to be fantastic news for decentralized finance. And it's really showing that, this open opportunity where you can swap to your token of choice for relatively no fees and being able to do things and settle them on chain. I mean, this is fixing a huge issue, a huge trust issue of where your funds actually have to reside in order to process trades. I use a lot of decentralized exchanges. I've used a lot of the actual decentralized derivative platforms for margin trading like Fulcrum. I know many people have been asking about BZRX. Outside of that as well, there's other plays out there like DYDX, all these different DeFi platforms, right? That can be a bit intimidating to maybe the broader public, but they actually work, and they've been working for some time. So it's really, really cool here. And I would say that, total decentralized exchange volume is actually higher than this. It's just a matter of that this is aggregating the four major platforms here that are really pulling in volume. And I apologize, one of them that they measured here was Bancor Network instead of Kyber Network. So again, even larger volume sets than what we're being told here. Now, outside of that, again, specifically talking about Uniswap, Uniswap is probably the leading project here. They've been continuing to see an exponential rate of growth within the sense of liquidity since we started to see the implementation of Uniswap V2. There's even some liquidity that's still on Uniswap V1. So this is over $100 million in actual staked coins or liquidity on the platform. And the volume here is around $40 million a day just on Uniswap alone. So really, really incredible stuff here. And you can start to see the major pairs and the major tokens that are actually being staked on the platform and the amount of liquidity that's available for each type of token to kind of see, what is basically being staked on the platform, and where you'll be able to make higher, amounts of trades in this case, right? So if I'm trading something with ETH, usually I'm going to be having more liquidity as well as with USDC. I can usually probably get the market rate there straight from Uniswap, exactly what I would get on a spot exchange. But if I, have a token that's not as liquid, right, that maybe there's not enough liquidity on the platform, then the larger my trade is, I might incur slippage or I might incur certain events like that. All right, so the last thing I wanted to talk about here today, to keep things brief and short and sweet to the point, I wanted to talk a little bit about an interesting thing that Whale Alert had put out. So Whale Alert is an individual in the cryptocurrency space that many people follow on Twitter and a few other platforms. And the major thing that Willard put out was basically that there's an estimate 1.125 million Bitcoin that is being basically assigned under a current analyst report to Satoshi, the founder of Bitcoin. Now, again, there's no exact confirmation here, guys. There are multiple methods that we can utilize in order to get an assumption here of what Satoshi owns. But I thought I would just share this here because, again, this is further validation from all of the major data scientists in the space, the people who are actually analyzing what we have on chain in regards to the information we can work with. The Satoshi roughly has about 1 million Bitcoin. And this is very important to keep in mind here when we're talking about the circulating supply of Bitcoin, the market cap of Bitcoin. We already, let's just say, let's negate the fact that Satoshi owned an amount of Bitcoin, right? Right now, Bitcoin's market cap is $172 billion with the current circulating supply, right? This alone is already very favorable for Bitcoin compared to other markets. I tweeted out the other day, and I'll go ahead and actually pull up the tweet here. I tweeted out that basically, putting aside any personal biases, that cryptocurrencies as a whole are really one of the only major asset classes. I'm not saying maybe a niche stock or maybe a specific commodity can't double in the next year, but really, as a broad industry, cryptocurrencies are the only space that can double, and it's because of the sheer oh yeah. Blah, blah, blah.
What happened?
I don't know. I lost my mojo, baby.
No. Are you still recording?
Yeah, I'm gonna see if I can just finish this up here. That at the end of the day, Bitcoin's market cap, as well as other cryptocurrencies, is much smaller compared to other traditional assets. And even talking on a fundamental basis and talking about the room that it has to grow, there is plenty of room that a digital asset space like Bitcoin and other cryptocurrencies could reach to that are providing finite supplies to not only provide as a hedge, but also to provide tokens and value for an ecosystem of emerging projects that could provide value far beyond what we can expect right now. We don't even know the full extent of decentralized finance, how far enterprise could actually take these blockchain platforms and applications. So again, keeping that in mind, it's going to be very important to focus on that when we're analyzing Bitcoin, when we're analyzing cryptocurrency markets, and to keep a relatively optimistic tone here as we, again, take the fuller perspective here as to what cryptocurrencies can achieve going into the rest of 2020, into 2021, 2022, and into 2023. So I'm very excited to continue riding this wave with you guys. It's a very exciting time. Again, I really don't have much interest in regards to equity markets right now. What's going on in traditional markets, it's relatively the same. I know that we've been doing a lot more crypto analysis as of recent, but there's a reason for that. And it's simply because right now, equities don't excite me that much. They're way too overvalued at the current rate. I don't think there's going to be enough central bank liquidity to keep these valuations as high as they are right now. And if anything, I'm focusing on much smaller cap companies or smaller cap projects in the crypto space. Again, a lot of things that have that kind of volatility and that ability to move in the market. And so far, we've been seeing that this is the time to start paying attention to those plays. All right, everyone, that's it for today's video. If you liked it, drop a like. Again, if you're interested in the Digifox giveaway for our community investing in themselves, check out the link down below in the description. I definitely want to see you guys participate in that, get more people sharing the message and investing in their future. With that all being said, guys, thank you all so much for watching, and I'll see you all in the next video. Stay tuned.